Are there any other sectors that you're getting bullish on? I mean, some of your recent research notes have actually highlighted gold and real estate as potential buys today. Care to expand on that?
Yeah, so we like the gold thesis. We're getting increasingly bullish on gold. And I'm not a gold guy. Like, let's just make that very clear. There are some.
I've never, this is new to me, so I'm a little curious.
Yeah, there's some investors out there that are just perma gold bulls, and no matter what happens, hell or high water, boom, bust, no matter what, they're bullish on gold. I'm not that, never have been really, but we've noticed just there's so many similarities in terms of price action with 2008, right? And that is why we made the macro call on short oil at 120, because we were like, hey, oil surged in 2008. And then it collapsed as soon as people realized a recession was likely. And we're like, this is what's happening right now. Oil is surging in 2022. It's probably going to collapse as soon as people realize a recession is likely. And that's what happened. Oil fell from 120 to 78 as we were making that short oil call. So the long gold call is a macro call along the same lines. Let's go back to 2008. Gold is viewed as a safe haven asset. But in 2008, gold fell with stocks for a large part of that crash, until the 8th or 9th inning of the sell-off. And the sell-off got really intense. The Fed really started to capitulate, started to do everything possible to save the economy from collapse. And there was a lot of money printing going on. And as soon as that happened, 8th or 9th inning of the sell-off got really intense, and Fed started to support the markets in whatever way they could. That's when gold caught a bid. That's when gold started acting like a safe haven asset. In late 08 into early 09, gold had a very powerful rally, a very good stretch. We think we're in that stretch right now. We're in the 8th or 9th inning of the sell-off. We think the sell-off's going to get really intense, and we think the Fed's going to start acting more supportive of markets over the next 3 months. So if you get all three of those things, gold has been crushed year to date with stocks, just like it was crushed year to date at this point in 2008. But we think we're at that critical inflection point where gold can actually stage an upwards rally here as this final sell-off ensues, things get really panicky out there, and the Fed then comes to the rescue of the markets with supportive policies. In that situation, gold could be significantly higher over the next 6 to 12 months.
And how long did that rally last the last time it happened?
For gold, it lasted quite a while. The gains were especially powerful in the first 3 to 6 months, but it lasted for several years. So that is also something to keep in mind, that this is probably a multi-year outlook for gold. But the way we're looking at it is more of a short-term, like 6 to 12-month surge in gold prices as a result of excessive panic in the markets. Because gold tends not to – it is a safe haven asset, but it doesn't act like a safe haven asset until people are really freaking out. Like, kind of freaking out doesn't get people to go into gold. You have to have like Armageddon level freak out for people to really rush into it. And, I mean, not that we're on the verge of nuclear Armageddon, though some people would argue we are. I think we're getting close to market fear levels, close to that. And therefore, gold is close to catching a bid.
Thanks for watching HGI Clips. For the full episode, head on over to our sister channel at Hypergrowth Investing by clicking the link in the description, or listen to the podcast on any of your favorite streaming platforms. We make new episodes every Wednesday, so make sure to check it out and subscribe to never miss any of Luke's Hypergrowth insights.